Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stan with tonight's Deep Dive. It is June 28, 2018, and I'm taking a look at crude oil today. USO is the ETF that one could look at if they don't trade futures. Let's go through the particulars here with the short, intermediate, and long-term trends all point to the upside. The technicals look good, but there's a couple things I want to bring to your attention here so that you start watching crude a little more carefully, especially if you're on the long side like we are. Pivot high just occurred here on our elastic level. This is an early warning signal. There'll be another signal that would pop up a little bit later in the phase, but it's telling us that the market has obviously gotten into overbought territory, and this is why I want you to start paying close attention to this particular market. If we take a look at some of our alerts, crude oil had a dazed, and we just recently with today's action had a surge high, which is kind of a profit-taking opportunity, and a lot of this is due to the fact that we just broke above this resistance level. These are daily bars for crude. You can see way over here on the right hand side that the market had broken above, and that level of resistance and now support, if I can pull it up here, is 72.46. So we're above that right now, but there was a lot of energy, no pun intended, that took place to get crude oil to break above that particular threshold. And so it would seem to me as if that the market is going to take a bit of a breather, and we'll see what takes place here. But with the fact that we have the fact that the market is a little bit overbought, no surprise. But what's interesting is that the energy level really hasn't done too much. It's kind of in no man's land, kind of in a neutral stage. I'm going to jump around here just a little bit. Here is the energy level. This is from last night, but it hasn't really changed. And here's crude oil, almost dead right in the center. This is an expansion type phase where we have wheat and copper, markets that have been doing and having explosive moves, if you will, while the yen down here at the bottom is in a consolidation. Crude is right there in the middle, kind of in no man's land. There's energy that is still out there that could be expended, and so I want you to be aware that even though we're in overbought territory, our systems are still long the market, and they've done so with daily bars. And the one particular system that's active, this Aldebaran system, is a trend based, so it's suggesting that there's a little more upside, but I think on the short term it's probably going to want to rest a little bit. The other thing I'm going to point out here, taking a look at targets as an example for crude oil, we're not at all-time highs, but we're certainly in a phase that we haven't seen these levels for quite some time. And what's interesting is that there is nothing above here that is close enough that would give us any type of resistance. It's almost like we're at new highs, even though we're really not. But those new highs, or those old highs, were so long ago that it's not even showing up on the screens anymore. And so therefore there's a unlimited potential for this market to potentially rally some more. So there's really no resistance to the market. There are Fibonacci targets we could be looking at, but when it comes to legitimate support and resistant levels that are near term within the last year, there really isn't anything showing up. So I'm going to point that out. The other thing I'll show is this, is that I always track all of the different markets relative to their CVAR, conditional variance. And what we do here is essentially this. Let me pull up a distribution chart. Here's a distribution chart for monthly returns for crude oil, and there's always a threshold where it's a kind of a cutoff both on the plus and the minus side. So CVAR, it's listed as negative, but it's actually an absolute. So negative, I'll call it 12%, and positive 12%. That's when you would consider on a monthly basis that the market is very much overvalued and has expended a lot of energy. Well, right now, even though this is a big month, it's only up 8.79%, and that's not taking into account the amount that happened today. So we're up, close to 9% here, and we still have theoretically a little bit more to go. And relative to all of the markets, relative to where our markets trading is going on for each individual market on a monthly basis, relative to its CVAR, this one's at, we'll call it, it's at 73.32%. If it got up to that 12%, then it would be at 100. You can see that the only market that is beyond its threshold at an extreme is Kansas City wheat, but the ones that are on the positive side, really looking at crude oil as one of the better markets, having approached but not hit and exceeded its CVAR. So that's another way of saying that the market might still have a little more potential. There's not too many more days in the trading month, but nonetheless, I'm just letting you know that there's still a little more potential upside from that standpoint. So as mentioned, our systems are long, and the fact that we broke above that support, or now that resistance level, I'll just pull this up again here, this resistance level, this is the level that we want to watch. We want to stay above that particular level, maybe it rests for a little bit, and then can have theoretically another surge. But the systems are picking up on this little trend that has already emerged, and there's a potential for it to certainly continue, but they'll have a hair trigger should it reverse back below this 72.46 level, and theoretically, if that should happen, we could be coming back down to some of these lower thresholds. But being overbought as it is right now, a rest and then perhaps another thrust to the upside here. We'll just have to see what does take place. And unfortunately, this means that when we start looking at some of these patterns, we're going to probably get some more signals that happen in crude oil, suggesting to take some profits here. Right now, our systems are what they are. They're long, and they're not having taken any positions or taking off any positions, but we are watching this market kind of carefully, given the fact that we broke above that level. So with that, just simply watch your crude positions kind of carefully because of that threshold that I was referring to, and we will be able to look at some more markets here in the coming days. Thanks so much for watching. Bye-bye.